started off okay with Fubo. We actually did really well, right? It was a nice climax right there at Cake, and then it like completely crashed to the bottom, where he's justifying everything he possibly can to say, oh, this is a great investment in AMD, even though it's destroying everything that I own, and it's the advanced money destroyer. So I'm gonna throw this into the My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Now let's get into the lesson of the day. So be sure to stick around to see how we're going to rank this out of 10, and subscribe if you haven't already. So this video is called Fubo AMD Cake Shareholders double exclamation point emojis. Get ready, double exclamation points, right? So this is coming from the Jeremy Lefebvre Makes Money channel. Let's see what Jeremy Lefebvre has to say. And this is a 37-minute long video, so we're gonna go at 1.5 times speed. If that's too fast, I'll turn it back down. Oh, hang on, I can't hear it. I gotta turn my speakers on.
3 core stocks I want to speak about at the beginning of this video here today. Fubo. What the heck's going on with Fubo? We were sitting on over 100% of gains that went down to 70-something% now at this point in time. So I want to let you guys know what's going on with Fubo and where that stock's going.
Let's look at Fubo. Fubo. Wow, okay, a penny stock. So Fubo, the penny stock, have been sitting around $1.50, give or take, lows of around $1.13, highs of $2.14, right? And then just absolutely catapulted, just rocket shipped higher up to $6 or so, and it's coming back down. I'm not a penny stock trader whatsoever. I'll give some perspective on it, but I mean, penny stocks are a world of their own.
Ahead from here, okay? Then we're going to speak about Cheesecake Factory stock. Some extremely bullish activity going on in regards to cake that I need to show you guys in today's video.
All right, let's go look at cake real quick. I mean, it's in an uptrend right now. Especially in an uptrend inside of a market pullback, right? That we've been seeing the market pullback like this for a while, but going back to Cheesecake Factory, this is a lot of relative strength here and still inside of a bullish trend.
AMD, we're going to talk about how to view a stock like AMD that's going down quite a bit right after you buy it.
I'll tell you how to deal with a stock like AMD. You don't buy it. You don't buy it. When it's trending down like this, right? You don't buy it, right? And cake is such a good example of a stock that is in a really relatively strong position right now, especially compared to the market, right? This is the market. This is Cheesecake, and you can see it's holding up really well. But then you go on the other end of it, and it's AMD, which is getting absolutely dominated by everything out there. What you do in a stock like that is you don't buy it.
Right, so we're going to speak about all those 3 stocks at the front of this video and where those are headed. Then I want to react to a few videos here today. One is Goldman Sachs playbook for 2025. The second one is Josh Brown's best stocks in the market for this year. Next up after that, the PPI numbers and talking a little bit about that. And then last up to react to will be Tom Lee, everybody's favorite bull, speaking about not only Bitcoin, but he also spoke about the markets in this video here today and kind of his perspectives on where things are headed from here. So hope everybody enjoys today's video. I appreciate y'all joining me as always. Thanks so much for being here. All I need from you guys, one thing only, for you to smash that thumbs up button for me. I appreciate everybody that does that each and every day. That definitely helps us out tremendously. Additionally, if you want to be subscribed here to the channel, you can certainly subscribe. I believe we're over 70,000 subscribers now at this point in time. Also, I don't know if you guys follow me on X or not, if you even use X, but if you do, you might want to follow me on there. I always have it linked in the description area of all my videos. But essentially, I make different types of posts like this. I made this one 20 hours ago. 10 big name stocks that are still a mile away from their 2021 highs. I made a post like that. Recently made another post around AMD stock, a very in-depth kind of AMD post here just a bit ago. So yeah, if you use X and you want to follow me on there, it's always linked in the description area of my videos. The pinned comment I usually always have to, if you look and enjoy my private stock group, okay? Alrighty, so let's get into these. Fubo first up here, and then we'll get into cake, then we'll get into AMD, and then we'll get into those reactions. So Fubo, what's going on here? Well, you're gonna...
All right, let's go back to the Fubo chart real quick. Now, we don't cover Fubo and OVTLYR. It doesn't meet our criteria, right? It's a penny stock. It's not something we cover at all. But let's take a realistic look at this without his pumping behind it. Fubo is absolutely in an uptrend. Clearly, some sort of catalyst has come through, right? You've got your 10 over the 20, price over the 50. It's inside of this order block on here. Now, if you've been following along for a while or not, that's okay. Check this out. Order blocks are large institutional orders that are waiting to be filled. And they get plotted on the chart, and they just sit there until price goes above or below them. but they can work as amazing support and resistance lines, right? So for example, this candle was created in August 16th of 2022. This created this order block here. The first time it came up into it, it gets rejected. Again, rejected, right? This is an area that is going to be a very difficult spot to get through, especially because that candle went all the way up to $8.15 from $4.30, right? It was a humongous candle that day. But every time it's come up into it, it's been solidly rejected until, or almost to today, until today. Now, it's still got to clear over that, right? There's still a lot of orders between $4 and $8 that haven't been cleared yet. But then it's created a second order block, right? People who were holding it down here got out, and now the people that are holding it right here are waiting for it to come back out or come back up to get out again. So I would personally, I don't trade penny stocks, but personally, I'm looking at this and I'm saying, you've got a lot of overhead resistance, right? Going from $1.13 to $6, that was a monumental move. But now coming back down, right? We went up 360%, amazing. But now we're down 41%, okay? Down 41%. What would it take to get back right there? Here's how the math works, right? 360% up, came down 41%. What do you think the percentage gain would be to get back to its all-time highs? It's not going to be 41%. It's going to be 70%. So the stock has to go up 70% from where it is today, 70% to get back to this recent high. That's a huge move. A huge move. So if you're waiting on a 70% move, I don't know how likely that is, right? But like I say, it's a penny stock. They do weird stuff.
Understand, when a stock makes a 200% plus move and then makes another big upward move the very next trading day, right? It attracts a ton of short-term traders, short-term momentum type folks, right? Now, those folks usually dump out of the stock a few days after the big news came out, right? So here we are. We're about a week from the big news that came out, and the short-term traders and the most momentum folks have looked to kind of look for the exit doors, and so obviously they sold out last couple of days here, and that should not come as a surprise at all. Like usually when you see a crazy move upward, 200+%, that's just
it shouldn't surprise you at all when you have a 360% move. Yeah, you should expect people to sell out. And I don't know, you've got a lot of overhead resistance here. The trend is up, but you've got a lot of overhead resistance. When they start stacking order blocks like this, I get really like, no, thank you.
What happens, okay? Now, additionally, you have new money trying to figure out, like, is Fubo an opportunity or not, right? Because you're going to get a relentless selling pressure for a couple days there where the short-term folks are going to sell out, which, by the way, that short-term massive sellout likely done at this point in time, just so folks know, okay? Most of the short-term folks have already.
I don't know. To say that the selling pressure is over, like if the selling pressure is over, then all that's left is buying pressure, right? To say that selling pressure is over, everybody who's going to sell has already sold, I think is just not true. And you can see that on the chart right here. There's people who are holding Fubo, like big institutional orders, waiting to get filled on Fubo as high as $35 a share. Okay, 35, maybe even higher. No, so there's people up here who are still holding, trying to get back to break even, right? And at some point they're going to capitulate and they're going to get out. Okay, so to say the selling pressure is over, I don't know about that. I don't know about that, because they could look at this and they could say, oh wow, it went from $1 to $3. You know what? It's better than zero. Maybe I should get out now.
Okay, is Fubo a great opportunity? Is it not, right? The stock made a monumental move, but now it's had a pullback. So now I think a lot of folks are going to kind of look at it a little more serious and say, you know what? I think this one's worth taking a dive into here, right? Now, in terms of the deal going through, I would give it about 85% chance of going through, but that's prior to today's news. So I would honestly maybe put this up to 90% now at this point in time, with maybe a 10% chance the government doesn't block it. But with this administration coming in, they should be more friendly to deal making, right? So there's only about a 15, maybe even a 10% chance that this deal doesn't go through. So a much higher probability the deal goes through than doesn't, which means the risk reward profile is, I would say at this point in time, especially now, $3-4 stock, let's call it's much more toward the reward side than the risk side now at this point in time.
I mean, fair point, right? If you are going to buy this, you're only going to lose $3 or $4 a share, but you could potentially gain $30-40 a share. I can see that.
Okay. Now, remember, if the 85% or 90% chance that it goes through happens, this is an opportunity for Fubo with Hulu plus live TV to grow into a 10, 20, or $30 billion market cap, right, over this next 5 to 10 years. Now, if the 15% or 10% chance that it doesn't go through, remember, Fubo still gets a $130 million payment made out to them, right? And I wouldn't be surprised if Disney then tried to just pursue buying the whole company or something like that at that point in time, right? But once again, this is lower probability this is going to happen. Now, additionally, Venue's dead. They officially killed it a few days ago. This was around 3 or 4 days ago. News came out that Venue Sports is shutting down for good, right? That was the whole thing that Fubo wanted to block, and now it's official. Like, Venue's done. So if was any still worries around Venue or whatever, like it's over. Like, it's over now at this point in time, right? Additionally, one of the main companies that brought up the complaint to try to block the new Fubo deal with Disney, right, was DirecTV. But here we go. DirecTV just basically threw in their cards in regards to that situation, because DirecTV just launched a skinny bundle, folks. Yes, they did. They just launched a skinny bundle. It is official. On Tuesday morning, DirecTV announced they're launching My Sports, an industry-first, sports-centric package with access to 40 sports and broadcast channels. The package will be available.
Who still has DirecTV anymore? Oh my gosh. Like, the streaming wars have come and like totally up into that industry. Who still has DirecTV?
Immediately in 24 metropolitan areas, including New York, Los Angeles, Chicago, Philly, San Francisco, so a lot of big markets, right? And we'll expand into more markets over time. Initially, My Sports will include national channels such as ACC Network, Big Ten, ESPN, all the big dogs, right? TNT, TBS, SEC Network. And additionally, they're supposed to launch with ESPN Plus as well here in the future. So the pricing, they're talking about $50 for the first 3 months and then go up from there, right? Now, this is huge. Huge good news, in my opinion, for Fubo. Some people might take this as a negative because they're going to say, oh, DirecTV's beating Fubo to the punch. No. First off, this is not even a good time of year to launch something like this. Football season is basically over, right? We got playoffs going on. We got a few weeks left here in the NFL season. We got literally one college football game. The time you want to launch a sports-related package, there's really 2 times in North America you want to launch a sports-related package like this. One is around the time NBA playoffs start, right? Because those are on a ton of different channels, and a lot of people like to watch NBA playoffs, and they got to figure out, like, I'm going to sign up for a package or whatever. The other is right before football season starts. So think like August, right? Before college football season starts, before NFL season starts, a lot of people look around, oh, I want to sign up for some sort of sports package here. That's the time launches. So my opinion is DirecTV is launching this at the worst possible time. Like, yeah, they're getting the first mover, like, hey, they're the first ones to officially launch this, right? But at the same time, like, I just don't know how many people even paying attention to this right now. Like, everybody that really wants a sports package already has signed up for some sort of sports package, either through DirecTV or through Fubo or through YouTube TV, somebody like that. Now at this point in time. So that's the first thing to kind of factor in. Second thing is, now this makes it where I don't think DirecTV has any say in trying to block this deal with Disney and Fubo now at this point in time. No say at all, because now they're already launching their own skinny bundle with obviously approval of ESPN and talking about ESPN Plus even being part of that. So at the end of the day, like, I would say now this is like a 90% probability this deal is going to go through. 10% probability the government blocks it, but I don't think there's a super high probability of that now at this point in time, right? So especially with Linda Khan, I believe she's out now at this point in time. So I mean, I'll say this is looking really freaking good. This is looking really, really, really good in regards to Fubo. So here's the deal. If this deal goes through in the next 3 to 5 months for Fubo, I think Fubo is going to be a $10 plus stock by the end of this year. By the end of this year, yes, $10 plus. That's assuming the deal goes through in the next 3 to 5 months, which, with the new administration coming in, and I don't think they're going to try to block this. That's my opinion on it. All things are possible. So Fubo's looking good here. Cheesecake Factory, extremely bullish activity in regards.
All right, let's shift gears over to Cheesecake Factory. So Cheesecake Factory, we do have inside of OVTLYR. So let's pop that open here and let's take a look at it, right? So we've got a sell signal here inside of an uptrend, which would tell me a sell to close. And we're a couple of dollars up from that point there. Where was that at? 46. Now we're at like 50-ish or so. So, I mean, that was a decent signal right here from 43 to 46. But I don't really have any skin in the game on this one. I'm looking at the behavioral heat map down here, though. It got really greedy on Cheesecake Factory around late November. It got really greedy. And then the greed has really come out of this, right? Going more towards fear, more and more towards fear. So for me, this is not what I want to see. I want to see it on the opposite end, where the investors who are buying this are getting a lot more greedy. And of course, when people are getting more greedy, that should push up the price of the stock. When people are getting less greedy, not so much so. You can see how it's gone sideways basically since the sell signal here, whereas this buy signal is in like a really strong uptrend. Now let's go look at the chart on here. And like I say, it definitely is inside of a bullish trend, a longer term bullish trend. You've got your 10-period moving average, which is the blue line, over the 20-period moving average, which is the black line, over the 50-period moving average, which is the red line. Now, having all three of those stacked in the same direction, that's the OVTLYR trend template. So the OVTLYR trend template is definitely bullish. And as I mentioned a minute ago, the stocks here, relative strength is actually super strong. In fact, let's do a side-by-side between Cake and the SPY, and you'll see just how strong it really is. So we'll do Cake on the left, and we'll do SPY on the right. And then we'll zoom in a little bit. You can see the two, right? It's very different stories on these two, right? So holding up this relative strength right here versus the market, I would say just be cautious, right? Now, if the market turns around and starts going back up, this could be a huge leader. Okay. Stocks that show relative strength while the market's trending down are going to be your next leaders coming out of a bear run into a new bull market here. So that's promising for Cheesecake Factory. I will absolutely admit that's super promising. But I will say, if you are an investor in this, I always start from a top-down approach. A rising tide lifts all ships, but a falling tide shows who's swimming naked. And the tide is going out right now. So if you are an investor in Cake, with it going sideways, with the sell signal and outlier, and with the fact that people are moving from greed down into fear, I would say that now may be the time to take profits and just get out, right? You can always get back in. Keep in mind, you can always get back in. You could put an alert at this new all-time high or this new 52-week high at 52.10 and say, you know what? If it comes back up, if the market starts getting stronger and we get over this this level right here, I might be interested in it. But until then, I would not be owning shares of Cake, just because I feel like you're leaving a lot of exposure on the table, especially while the market is getting weaker.
This one, right? Now we're up $30,000 on the stock. It's up another 2.5% plus here today. This is extremely bullish activity if you're a long-term investor in Cheesecake Factory. I mean, extremely bullish activity. Okay.
Now, keep in mind, long-term investor, short-term trader, you don't want to be in any stock that's going down, right? You don't want to be in any stock that's going down. Doesn't matter the tax consequence, right? If it is moving upward, you could still continue to hold, right? But if a stock is ever moving down, like I say, doesn't matter if you're a short-term trader or long-term investor, you don't want to be holding anything that's dropping. And Cheesecake, as of right now, it's going sideways, but it does have a lot of relative strength.
So I don't know if you guys saw it. Well, you probably didn't see this unless you're in my private stock group. I posted this inside Breadcrumbs yesterday. I said, chart of the day. Russell's now in correction, over 10% down. Other major indexes are in pullback, right? Because I was showing here that the Russell's down over 10%. This is since Christmas.
Here, let's compare this to IWM, the Russell 2000. You can see, yeah, the Russell 2000 is just, it's really ugly.
Dow Jones was down about 6%, S&P 500 down about 4.5%, and the Q's down about 3.5% roughly, right? Now, that's important because you got to understand, if the Russell is showing real weakness, what is the Russell? The Russell small cap stocks. Cheesecake Factory is a $2-something billion market cap company. It's a small cap stock, right? It gets put in that same category as all those stocks. So when you see a stock like Cake, a small cap, performing so well, even with the Russell being very, very weak, that's very bullish. But that's just a start. This next thing,
I agree with him on that. The relative strength is bullish, but keep in mind, the market's going to be a weighting factor on this. However, if it holds that relative strength while the market's trying to pull it down, that's a really strong sign.
Much more bullish. I mean, this is where I say it's extreme bullishness. Check this out. What I'm showing you right now is from the time the Fed announced they're going to cut rates, okay? I'm showing you that. That was September 18th. And I'm showing you Cake stock since that time period. Cake stock has gone up 30% since the Fed announced they're going to start cutting rates. Now, the 10-year Treasury has moved up almost as much, 29.9% over that time. Now, if you look at arguably the most popular dividend ETF in the world, it's SCHD, right? It's Schwab's dividend ETF there. Over that time, the dividend ETF has gone down, not up, down 2%. Meanwhile, Cake stock has gone up 30%. We have a monumental divergence between what is going on with Cake, which is a high yield dividend paying stock, right, versus a dividend ETF that's extremely
hard to see that correlation there. For me, hard to see that correlation there. I mean, you're talking about an ETF, and then you're talking about the Cheesecake Factory, right? And the 700 flavors of cheesecake, and the menu that's as thick as a phone book. What's a phone book, Dad? Yeah, I know. I don't know. I don't think comparing those two is a real apples to apples comparison.
Popular. So what this, and the reason, by the way, dividend stocks have so much trouble when treasuries are going up so much is because basically investors will say, why am I going to go buy dividend yield stocks when I could just go ahead and put my money over here in treasuries and earn 4+%? And specifically when treasuries start going over 4%, that's when dividend stocks have a lot of trouble. If treasuries are in 3% range, that's fine. 2% range and dividend stocks are the play, right? If treasuries go over 4%, and the more they go over 4%, the more dividend stocks have trouble, right? Because people say, I'm not going to risk my money over here in some dividend stocks when I have treasuries giving me 4% plus guaranteed from the U.S. government, right? It's understandable. And so the fact that Cake is performing so well despite the 10-year making that insane move, this is phenomenal. And so I'll put it to you like this, right? Great stocks are like a Usain Bolt, okay? They run their own race. They're not even worried about everybody else is fighting for second place. Everybody else is fighting for whatever. I'm running my own race. I'm doing my own thing. And whatever everybody else has got going on, y'all can do that thing over there, okay? But I'm running my own race.
To a point, right? Because if we're really being serious here, all of these other stocks would be like the market, and they all have like an elastic band around Usain Bolt, right? And they're all like, hey now, hey now, hey now. But at some point, it can only go so far, right? However, the opposite's true. Imagine Usain Bolt's in the back and all the elastic band is with the other guys. They're going the other direction. They're going to help pull him up, right? When the market's going down, it's going to pull down against everything else. So even a strong stock is going to have relative difficulties. Whereas if this was a really bullish environment, cake could be up 20%, right? It makes a huge difference.
And that's what great stocks do. And so it's clear as day, Cheesecake is emerging as a truly great stock that has such a compelling story to it, right? For our investors about where Cheesecake going over this next 5-10 years, and people are really starting to understand, like, oh, this flower child concept that's going to be huge, and OVTLYR is going to be huge, and then they got these other concepts coming behind that are very successful. People are starting to understand the story is a very special story. This is not just another dividend stock. If it was just another dividend stock, this would be down with SCHD down here, down like 2%, or down 5%, or down 10%, not up 30%.
Okay, there you go. Yeah, if it was just another dividend stock, then I could see that. So thank you for clarifying that.
Since the Fed announced rate cuts. So Cheesecake's running its own race, man, and it's phenomenal to see. Now let's go ahead and discuss AMD. And I understand there's a lot of investors.
AMD, Advanced Money Destroyer. We talk about this like it feels like every single day. Such one of those stocks that everybody's so excited about, and I don't know why. Right? Let's look at the comparison between Cake on the left and AMD on the right. Right? This is a stock that's relative strength. This is a stock with relative weakness, and you can see just how much the difference between the two is. Right? So Cake is definitely, in my opinion, a much stronger investment versus AMD, and AMD at this point just looks like it's going to zero. But curious to hear. Clearly he's a shareholder, so he has a long bias here. But like I try and preach this every single day. You don't have to hold the stock that's going down, right? If you look at the stock, you throw those 3 moving averages on there for the outlier trend template, your 10, 20, and 50 period EMAs, and you see that they're pointing down. That is a bearish trend. And even if you're a long-term investor, you want the price of the stock to go up, right? Hear me out. If you're a long-term investor and you love the fundamentals of a company, the fundamentals aren't going to pay you anything. It's only price that pays. Only price pays. Take that, write it on my tombstone. Only price pays. So even if you love the stock, even if you love the company, if the price is not moving up, there's no sense in owning it. And you can try and justify to yourself, hey, this is a long-term investment. Is it a long-term investment that you're comfortable with holding down? Just going to find 2 points right here, 28%, right? Are you comfortable with that? Well, I don't want to sell because of tax reasons. So you're comfortable with holding something that's down by 1/3? You've lost 1/3 of your investment because you didn't want to take a tax? You didn't want to pay tax on it? That makes no logical sense to me whatsoever. Now, I read your comments, and that's why I want to stress this, right? Doesn't matter if short-term trader, long-term investor, or tax consequence. When a stock is going down, you don't want to own it. Period, flat, end of story.
That are newer to the market that just got in the last few months, right? That don't really understand how to view something like this. So as somebody that's got 16 years of experience here and has millions of dollars of gains, right? Here's how I view, and here's a proper way to view a stock you're buying going down in the short term, right? Because I understand, like, newer investors, if you don't have much experience, you don't know much about them.
Just going to pull this up, and I'm going to see where does we've talked about this before in the live stream. I think we're down here in the capitulation, anger, panic phase of AMD. I mean, if we look at AMD on a broad enough time horizon, right? This really looks a lot like this. So I would put it somewhere down here in the 9, 10, 11 phase. And I'm telling you, you don't have to hold the stock going down.
Market, right? You're just kind of like, oh my gosh, like, what's going on? This stock's going down. This is bad, right? And you hear a lot of these bad things that aren't true.
Yes, the stock is going down, so that's bad, right?
Or aren't accurate, like, catching a falling knife and all these sorts of things. That just
That's exactly what you do if you buy a stock when it's coming down. You catch a falling knife, and what happens? You get cut.
complete BS, right? I love to catch falling knives, and the far majority of the time, I make so much money coming out of it.
Why do you catch a falling knife? Dude, listen. If you honestly think that AMD is going up, here's the deal. You don't have to buy it on this side of the curve. If you honestly think maybe even today is the exact bottom, you can buy it on the opposite end and you can watch it go. Draw on the chart here. You can watch it go down, figure out what it's doing, and then come back up. And then you don't have all the risk on the table as it's moving down and wiping out your capital, wiping out your mental capital, and then just taking you to the bank, taking you to the cleaners when you could just wait. I mean, you may love AMD, and that's cool. You do you. But I'm not touching AMD with any money. I wouldn't buy AMD with your money. No way.
That people are like, I wish I was there to catch that fallen knife with you, right? And so you understand how to view something like this. You don't view it from a...
There's no guarantee it's ever going to go up. One of my mentors was Mark Minervini, arguably one of the greatest traders of all time. And so one of his quotes is this right here. It's knowing you should sell a stock and get out when it does this, right? When it's going down. But you're nervous because you're afraid it's going to go up without you, right? You're afraid of missing those gains. But what can actually happen is you get down and you get wrecked and you get destroyed. And then when you're on the other end of it, you're thinking, man, if only I had held to my plan and said, hey, when a stock's going down, I don't want to own it. If a stock is going down, you can get out. Nobody is making you hold this forever. Nobody's making you hold this stock forever. Stop forcing this. Stop looking at the chart. Stop trying to say, hey, you know what? I'm smarter than the market. It's equivalent, and I say this all the time, it's equivalent to standing on the train tracks and saying, stop right there, turn around. We're going the opposite direction. All right, we're going north. Stop going south. We're going to start going north today, okay? And you're just going to get run over. You're just going to get run over. People buying AMD are getting run the frick over day after day after day. There's nobody saying that it's going to stop here, right? Those people who are saying that it could stop here at 116 were the same ones who said it'd stop at 150. And then 140. And then 130. And then 120. And now we're down at 116. Right? Buying the dip doesn't work if the dip keeps on dipping. If the dip keeps on dipping, you're going to get wrecked. But you could wait. You could wait. Once it finds that strength, once that outlier trend template shows you that it's turned the other direction, then might be a great time to get in. But while the market's going down and your stock is getting wrecked, just avoid AMD at all costs.
Context or a lens of like, it's going down, that means bad. No. If you guys watched the video I did last night on the main channel, right? I'm not sure if you guys follow me on the main channel. It's called Financial Education. I dove into those 7 stocks there, and I also discussed my price targets for those stocks 3 years out. Okay, and what we found.
Your price targets are meaningless. I could set a price target. My price target is just as valid as your price target. The market gives no shits about that, right? My price target on AMD could be $1. And I'm just as likely to see that happen as your price target, maybe $1,000, right? The market doesn't care. The market can stay irrational much longer than you can stay solvent. So if you decide to buy AMD, do so at your own risk.
When I ran my AMD numbers, I had that stock being over $400 a share 3 years from now. Now,
I nearly spit out my coffee on that one. I was just joking about the $1,000 a share. I didn't realize he would actually say 400. I thought he would say something like 130 or something like. No. He's saying it's going to triple. Okay, dude.
Even if it doesn't go there, let's just say 250. I still made over a double that, like on my.
Let's just say it just doubles, right? This stock that is basically pointing like it's going to zero is going to double. And it totally could. I'll give you that. On a long enough time horizon, it totally could. But you don't have to buy it while it's going down. You can buy it when it starts going back up.
It's a phenomenal opportunity. The stock is a phenomenal opportunity. And so I'll take every share I can get my hands on right now at these sorts of prices.
Dude, go ahead. Buy as much as you possibly want to at these prices as it's going down. And then when it's on the opposite end of it, and you have an average cost of like 130, right? And then everybody else is like, oh, wait, I bought it when it was down at 90 and then started coming back up. Their average cost is going to be, 90, 95, 100. After it starts coming back up, you're still really underwater on that investment. Bigly, hugely underwater.
Gladly welcome them. I'm not selling AMD for several years, likely, right?
Why? What justification do you have to not sell it for several years? If you really think it's going to go to 250, maybe 400, just hang out. Listen, if it turns around, that difference in 6, 8, 10 weeks or whatever for it to find a bottom and turn back around is going to be nothing to you if you're going to hold this for multiple years. So why are you going to hold it right now while it's destroying your pocketbook?
So given that I'm not selling AMD stock for several years and I'm trying to buy as many shares as possible, I would like my shares as cheap as I can possibly get my hands on them right now.
Well, if that's the case, then stop buying it now. If you want it as cheap as possible, stop buying it now. while the price is continuing to go down. That's like walking into it's like walking into the grocery store and you see bananas are usually $1 each, right? And you come back tomorrow and they're 90 cents each, right? And you come back the next day and it's 80 cents each. And you're like, well, daggone, let me just buy as much bananas as I can at 80 cents. And then tomorrow at 70 cents, you're like, shit, I messed up. I should have been buying my bananas today at 70 cents. And the day after that, 60 cents, right? This right here is what happens with deflation, right? Everybody thinks that inflation is the worst thing ever. And it really sucks, obviously. But deflation can be even worse, right? Because this price is being deflated. And the people who are waiting to buy are waiting until it goes down even further, which is a self-perpetuating cycle. And the people who are holding it are saying, I need to get out while I can because the price is going to continue to go down, which further exacerbates this self-fulfilling prophecy, right? Selling begets selling, buying begets buying. And dumb people do dumb things like buy stocks as it's going down. I don't want you to be a dumb person. I want you to be a smart person who says, oh, I can just throw 3 lines in my charts and see when it starts to go the opposite direction, right? Doesn't mean it's going to last forever. Absolutely not. Doesn't mean it's going to last forever. But it's at least going to put you on the right side of the trend.
Like if you told me would I rather have AMD be 115 today or $85 today, I'd rather have it be 85. Would I rather have it be 85 or 55? 55. Would I rather have it be $55 or 55 cents? 55 cents. Please give me AMD for 55 cents.
Okay. But you're cool with buying it all the way down to 55 cents, apparently. You're cool with watching your investments evaporate down to 55 cents. Got it.
Obviously, it's completely unrealistic, as $55 is as well, right? But you get the picture. I would rather have that stock be as low as possible right now because I'm buying as many shares as possible that are going to make me a fortune of money over the next few years. Like that
could, or it could go down to 55 cents and you bought it at 115. You're not making a fortune on that.
That's the way to view this. If I was buying AMD at $200 something today, it's not nearly as compelling of a risk reward profile then at that point in time, right? So for stocks I'm planning on holding for likely several years, I don't need to have that stock be any. I would rather have it be much lower. Have me be on a loss right now. I have so many stocks with such insane gains. I don't need my ego stroked again by having another stock go beast in the short term. Go down in the short term. That's fine with me. If I need to stoke my ego, I'll pull up.
Dude, this justification for holding on to a losing stock is honestly sad, right? That's all of this right here. All of this anxiety, denial, panic, capitulation, anger. That's every bit of what he's describing right there. I don't want you to do that. And you don't have to do that. And anybody who says you have to buy a stock as it's going down is just flat out wrong. You can wait until the stock turns back around and you can ride this beautiful, beautiful trend up and completely avoid all this nonsense on the other side. So let's do this. Let's go rank this video here. Where is my slide? Okay. How would you rank this? Tell me in the chat where you would rank it. Listen, the Fubo, I don't know much about. Penny stocks are not my thing. They act crazy, obviously. So that was some interesting information. I don't know anything about it. The Cake, I actually think he did a good job with Cake because that one has a ton of relative strength and it seems to be performing really well. If it was just, if we just outlined it for just the Cake video, I would throw that in the 6, a decent video. But taking the whole of it, right? We started off okay with Fubo. We actually did really well, right? It was a nice climax right there at Cake, and then it like completely crashed to the bottom where he's justifying everything he possibly can to say, oh, this is a great investment in AMD, even though it's destroying everything that I own and it's the advanced money destroyer. I definitely need you to buy it because I'm afraid where that's going to go to zero. Or it's the I would love it to go to 55 cents. I want AMD to go to 55 cents so I can buy as much as possible. Sure. We'll buy it down there. Don't hold it from 150 down to 55 cents and think you're a genius when it goes up from 55 cents to 65 cents. Just wait. Just wait. Just wait until the trend template shows you the opposite direction. That's it. Just wait. So I'm going to throw this into the painful. I'm going to throw this in painful. I can't throw it as a forgettable because I did learn something on Cheesecake, but painful watching him try and justify how great AMD stock is as it's going, pointing straight down. So let me know. Tell me in the chat what you're trading. And of course, be sure to come back tomorrow. We'll help you save time, make money, and start winning with less risk together as a team. And I hope you have a fantastic day. We'll talk soon.